Hi everyone, welcome to this session where we are going to discuss a question on taxable income. And the question says, Mr. Kobe is a civil servant who earns a monthly salary of 21,200. He has a house allowance of 12,000 per month. Other taxable allowances are commuter, Kenyan shillings 1,100, medical allowance 2,000 shillings. He is entitled to a personal relief of Kenyan shillings 1,240 per month. Using the income rates below, solve the questions that follow. So learners, you can see we have a table with the two columns. The first column is income in Kenyan shillings per month. Then the next column is rates in Kenyan shillings per 20 shillings. It's very important, learners. First of all, we get to understand what the table heading means for us. We get to understand what the table heading means to us, learners. After that, so you can see there we are having rates in Kenyan shillings per 20 shillings. What does it mean? That this rate is for every 20 shillings you are being charged that rate. Question: determine Roman 1 the taxable income. How do you calculate taxable income, dear learners? How do you calculate taxable income? Remember that taxable income learners is calculated by taking the basic salary plus allowances. That is how you calculate the taxable income. When you talk about the taxable income, this is the amount from which tax is being levied. The amount from which tax is being levied. So learners, we do substitution here. What is our basic salary? We go back to the question. This Mr. Kobe earns a monthly salary of 21,200. So the 21,200 is the basic salary. So that is 21,200. Then we are going to add our allowance. He has a commuter allowance of 12,000, so we are adding the 12,000, which is our commuter allowance. Let's also see if he has another allowance. Other taxable allowances, this 12,000 was the house allowance. Other taxable allowances are commuter allowance, which is 1,100, medical allowance, which is 2,000. So that is 1,100 plus 2,000. 1,100, you add 2,000. When you do the summation here, remember this amount is in Kenyan shillings. So that becomes 36,300. 36,300 Kenyan shillings. That is the taxable income. That is the amount from which tax is going to be levied. Roman 2, the net tax. This net tax in bracket, we've been told what? The payee. Another term for this, learners, if you don't get this, sometimes you can get them, they are talking about the tax paid. So if you get a question saying calculate the tax paid. That is just still the net tax, the tax paid. So for us to get the tax paid, because you know that tax is going to be levied from the 36,300, we are now going um, to tax this amount. So we see in the first band between 1 to 8400, 2 shillings is being charged. But remember, it is 8400, but for every 20 shillings in 8400. So in the first band, it is 8400, 8400. For every 20 shillings of it, we charge 2 bob. When you do that multiplication, that becomes 840. That's the first slab. In the next slab, how do you get the value in the next slab? You simply take 18,000 minus 8,400. 18,000 minus 8,400, you get 9,000. You get 9,600. So in that one, you're getting 9,600. And for every 20 shillings in the 9,600, we are charging 3 shillings. So the tax there will give you, when you do that multiplication, that is 1440. 1440. Then we go to the next band. That is now 30,000 minus 18,000. You are going to get 12,000. And in this 12,000 that we've gotten, learners, for every 20 shillings in 12,000, we are charging 3 shillings. When you work it out, you are going to get sorry, not 3 shillings but 4 shillings. 4 shillings, 4 shillings, not the 3 shillings. That should be 4. And when you multiply, that is 2,400. Remember these values on our right hand side. Maybe let me just indicate using a different pen. These values here this is our taxable incomes. This is our tax. We proceed. When you look at the summations here, we are still noted there. We are going to the next band. That is the next band, 36,000 minus 30,000. You're going to get 6,000. You're going to get 6,000. You're going to get 6,000. And for every 20 shillings in 6,000, we are going to charge 5%. So times 5, that one you are going to get 1,500. Sorry, you are going to get 1,500. You're going to get it as 1,500 learners, like that. Then let's see if we say, remember that our taxable income was 36,300. So that one lies in this slab. So we were to tax up to this slab because that's where 36,300 lies. But now to memalize up to 36,000. So what is remaining? We are remaining with, from 36,300, we are remaining with 300. Meaning on this last slab we are going to tax only 300. So in the 300 we are going to tax, for every 20 shillings in it, we are going to tax how much? We are going to tax 6 shillings. We are going to tax 6 shillings. So in total, how much are we going to tax? In total, we are going to tax 90 shillings there. Now, learners, this is your tax. What do you get when you add the summation? When you add the summation, you're going to get 6270. This 6270 you've gotten, learners, is what is called the gross tax, or the tax due, or the total tax, 6270. After we've gotten the gross tax, we are going to subtract relief. After we've gotten that, we are now going to get the net tax. We are going to take gross tax, you minus the relief. Our gross tax we've gotten is 6270. You minus the relief. What is the relief? The relief from the question, this person is entitled to a relief of 1240. So you minus 1240. So this is in Kenyan shillings. This is giving us 5,000 and 30. 5,000 and 30. 5,000 and 30. And that is your payee, or what is called the net tax. That is your payee or the net tax. Roman B. In addition to the payee, the following deductions are made: 250 for NHIF, 120 for service charges. He repays a loan of 4,500 and contributes towards savings at 1,800 shillings per month. Calculate the net salary. Learners, this is what we call the net salary here. Is what is called the take home. How much are you going with home? Is what is called the take home. It's called also the take. And we normally take the gross salary you minus the deductions. Sorry, just apologies for that. You minus the deductions. You minus the deductions. So, first of all, let's get the deductions. The first deduction is the tax you are paying to the government, which is our pay, which we got as 50/30. So that is our first deduction because you're giving it to the government. Unalipa ushuru. Then the next deduction you are seeing, this person is giving 250 shillings to NHIF. The moment analipwa mshahara, NHIF inamkata 250. Another deduction is 120, which is for service charges. 120. Then also this person repays a loan. Kuna loan inamkata 4,500, 4,500. Then also that we are being told this person contributes 1,800 towards savings. Maybe he's in a savings circle whereby inabidi atoe of hela wakati tu ambapo amelipwa. So the total deductions in Kenyan shillings amount to, when you sum the amount, it's 11,700. Then now you come and say my net salary, which is the same as I've told you, we also call it the take home, is given by the gross salary which you obtained as our taxable income, in this case 36,300, minus all the deductions 11,700. So this will give you, learners, in Kenyan shillings 24,600. That's the amount that someone will receive in Kenyan shillings and take home. This person is earning 36,300, but after all deductions, he will go home with 24,600. So the amount that you're going home with is what is called the net salary or the take home. Thank you, learners, for being part of this session. For any inquiries, more consultation, our hotline number, learners, remain as 0741304311. Keep inviting friends, share the link with others, tell them how valuable this channel is. See you next time. Thank you.